crowdfunding, innovative finance, or electronic begging? Crowdfunding is a way for fledgling projects too risky for traditional banks to get off the ground, and a way for dozens or even hundreds of small investors to all put a little bit of capital at the same time, in hope of high rewards. London has emerged as the world capital for this way of financing startups. Let me show you one E. More crowdfunding campaigns are being created than in any other city in the world, with an average of 12 being launched every single day. The industry is set to be worth around £1 billion by the end of the year. The Chancellor's called crowdfunding the dawn of a new era of innovative finance. And the Financial Conduct Authority takes it seriously enough to have introduced rules on how much investors can put in. But the companies asking for cash tend to be fragile at best. Only 32% get the seed capital they ask for. Is it good for startups and those who invest in them? You can join in the debate by messaging yes or no on Twitter and using our hashtag #DigitalView. Let me know what you think. With me to debate the industry's merits are Jeff Lynn, Chief Executive and co-founder of crowdfunding platform Seedrs. I'll spell that for you, that's SEEDRS. And the tech entrepreneur David Murray-Hundley. Thanks very much for being with us. Now, Jeff, why is London proving to be such a rich source of money? Are there a lot of mugs out there prepared to throw a few dollars your way?
Far from it, Martin. I think that London has proven to be a tremendous place for crowdfunding for a couple of reasons. One is that capital is spread much differently here than it is in places like the United States. We don't have as much of a super rich elite, but we have lots of professionals, mass affluent individuals who want the opportunity to invest in growth businesses but haven't had the chance to do so before. Crowdfunding opens this asset class to them, and they've taken it up very strongly.
And David, there are risks involved, right?
Indeed there are. And I think there's some very obvious risks. But I think there is also a number of people out there that look up to these platforms and have a certain element of trust and expect them to do the right checks, if you like, and cross the T's, dot the I's, and that's not always happening right now.
In what sense do you think it's a bad punt? It's an unwise investment. Clearly there's no guarantee of a return on your investment at all, is there? But there's the possibility, I suppose, of a very big return on a modest investment.
Yeah, I mean, I think some people, there's two distinguishing areas, because you have the reward side, which is based on effectively buying a product, and then you have the investment side into a business. So I think with the investment side, people are viewing it as being, I might be investing into the next Facebook. There are platforms out there, certainly in the UK, that do some great checks on those businesses. There are some that are, I think, being pushed internally as a business to build numbers, and so the quality is not quite there. And when you look at the reward side, there's a lot of high-profile companies actually on some of these platforms that are raising considerable amounts of money. And in my own experience, one that raised a load of money and no one ever heard from again.
Jeff, how do you mitigate the risk that David alludes to and make it a sensible investment? Do you need more regulation in this area?
Well, I think that regulation is very important. Seedrs was the first equity crowdfunding platform, so investment crowdfunding platform anywhere in the world to be regulated. We got regulation before we launched, and we've always seen that as critical. But I agree with David's concerns very much. I think that a proper vetting process and proper investor protections are absolutely vital to make this space work. These investments are high risk. There's no question about it. The vast majority of startups fail, and you should only be investing in this space if you're prepared to build a big portfolio, diversified portfolio, in the hopes of having several big winners. But even then, it is very important to go with a platform that does proper due diligence on the businesses that they put on, and that enters into proper investor protections. I mean, that's a big difference between the platforms in this space. I'm proud to say that Seedrs has really taken the investor side ever since we launched.
So, David, do you think in some senses people, perhaps like yourself, have had a bad experience, were too naive?
I think on some of the reward side, yeah, possibly we were a little naive. There's quite a few examples out there, and it masses into millions. I think on investing actually into a business, in my case, I've actually walked away from a number of deals on some crowdfunding platforms. The concern is, I had a business plan this week which came across my desk for funding, and I wouldn't touch it with a barge pole, yet I discovered yesterday that actually they've been accepted onto a platform. So I worry about the smaller investors out there that do pass the checks and have a £10,000 sat in an account and think, this looks good and credible, and then there's sort of a lack of construction behind the actual business, and I think a lot of people are viewing the crowdfunding space as a good PR marketing scheme more than even raising the cash sometimes.
Yeah, just a quick thought, Jeff. I mean, in terms of in making your investment, it's not just a matter of making money. Do you have to have kind of an emotional belief in the project you're investing into?
Well, I think that any time you invest in early stage growth businesses that are all about a particular story of growth for the future, it's a combination. The financial return is absolutely critical, but you should invest in what you know, and you should invest in what you care about. On a platform like Seedrs, we have a range of investors. Some people who are simply doing it for the financial returns, others who are there to back businesses that either their friends and family are starting or simply that are doing something great that they like. And crowdfunding is intended to be a world that's open to all different types of investors.
David Murray-Hundley, Jeff Lynn, thank you both very much.